We saw import price index, right? The import prices. Forecast was 0.5% increase. We saw only a 0.1% increase. As soon as this data hit, the futures were down. They started to reverse and rally to the upside. Now, we're not up a huge amount, but ultimately, it's the positive nature. Finally, after PPI on Wednesday, CPI on Thursday, both coming out hotter than expected, finally showing that prices are coming down. The markets are rejoicing. Okay, so that's number one right here. Now, a couple other things I want to go over. As we get into this, we got to look at the 10-year yield. Now, you can very clearly see the 10-year yield. This is the 10-minute chart. We've started to fade as those export prices came out or import prices came out. The 10-year yield is going down. We know that markets move inverse to the 10-year yield right now. So if the 10-year yield is fading, that's going to be a positive for risk assets like Bitcoin, like stocks, and so forth. All right, then if we flip over to the dollar. The dollar is down a little bit on the day right here, and again, had a huge update yesterday which spooked the markets, but again, we are seeing it coming back in here. All right, going back to the 10-year yield, quickly showing you this. This is your daily chart on the 10-year yield. Just to reiterate what I've said for every day in this game plan for the past week since it occurred, there's your topping tail. To me, that's the only thing that matters on the daily chart. Unless that topping tail is negated, and by the way, for those of you that are new watching me, topping tails are reversal bearish signals. So unless that gets negated, it is a downward general trend on yields. Doesn't mean we can't have a bounce like yesterday, right? But overall, look at yields right back down today. Also, if we just flip over to the bigger time frame, the monthly, I continue to be a fan that the monthly is telling us, and the monthly is the biggest time frame of all, it is telling us that we have topped here. All right, so you can see all these trend lines. Look at the pullback we got off this one. Look at the pullback we got off this one. The thought process is topping tail here with the trend line. So not only potentially do we have the trend line hit, which should cause a pullback, but we get the topping tail. It's like having two factors there that are pushing it back down. I would expect a retrace at least back, honestly, sub 4% over the next 3 to 6 months, maybe even well below 4% on the 10-year. Now, again, should we get above this trend line and confirm, should the topping tail be negated, well, then you have a whole new ballgame. Then you accept the facts that the charts, again, have changed, probabilities have changed, and markets, again, or at least yields could go higher and markets could go lower. Dollar chart, again, guys, really everything you need to know here if I zoom out on the US dollar. The reason why I'm showing this is just because this is where I think the dollar is going. We know that the resistance lines are perfectly aligned here, so we have the pivot point on the dollar. We had a bounce yesterday. We're starting to come in. This is your target right down here near term. Notice it's this pivot high right here as well. So you're looking at 104.50 as being your downside target on the DXY in the near term. I think we probably hit that within the next 1 to 2 weeks. Again, if I'm correct on this, the markets may still have a little bit of upside to go before we get another big rollover as the economic data starts to spiral into a major recession.